Welcome back, everyone, to the Audacious Money Witch channel, where we talk about investing and trading and a lot of fun things. Why I initiated a buy on QSR's Burger King stock and Popeye stock, the restaurant brands Bill Ackman owns. Satisfying your cravings has never been easier with the rise of fast food chains through the years, whether it's pizzas, burgers, deep fried chicken, or donuts and coffee, or you'll certainly have some place you'd easily get them from, one of which is the Restaurant Brands International, which is the parent company of some of my favorite fast food chains that I love: Tim Hortons, Popeyes, and Burger King. Why do I love them? They provide satisfying fast dining experience and value for your dollars. I mean, in today's inflationary world, millennials and Gen Z's trendy new splurge is now groceries. In this video, I will explain why I started my position in QSR stock, which owns Tim Hortons, Popeyes, Burger King, and more. Canadians love Timmy's coffee. It has more value than Starbucks, and I am loving it.
Game changer! And it's delicious. I wouldn't have guessed that it was Tim Hortons. It's very good.
Popeyes now tastes better than KFC's fried chicken. Their chicken sandwich is loved by so many.
Because you know magic when you see it or when you taste it. We don't make sense. We make chicken.
Also, Burger King's Whopper is literally bigger than the Big Mac. It's not a vegan meat trend that is short-lived. If I was buying this stock instead of Jeremy's Tattooed Chef, I wouldn't be experiencing TTCF Chapter 11. Lesson learned. I just did a video last week about the big problems in Jeremy's Cheesecake Factory restaurant. I still can't believe he is shorting Chipotle.
All the comments were insanely negative in regards to Chipotle. Chipotle is a new Subway. Did Chipotle Quiznos themselves?
He certainly doesn't understand there is a wide moat around it. According to Bill Ackman and Phil Town, two famous real hedge fund managers, billionaire investor Bill Ackman is best known for his large stakes in the companies like Restaurant Brands International and Chipotle.
The beauty of the restaurant business, and we've actually, our best track record is in restaurants. We've never lost money. We've only made a fortune, interestingly, investing in restaurants. We own a company called Restaurant Brands. Restaurant Brands owns a number of quick service companies, one of which is Burger King. And the quick service business is about systems, building a model that a stranger who doesn't know the restaurant industry can come in and enter the business and build a successful franchise. Now, Chipotle is not a franchise company. They actually own all their own stores. But many of the most successful restaurant companies are franchise models, like a Burger King, a McDonald's, Tim Hortons, all these various brands, Popeyes. And what's interesting about Chipotle is what they've achieved is difficult, right? They're not buying frozen hamburgers. They're buying fresh, sustainably sourced ingredients. They're preparing food in the store. That was a first. Quality of the product at Chipotle is incredible. It's the highest quality food you can get and eat really healthfully and very high quality ingredients. And that's just not available anywhere else. And it's very hard to replicate and to build those relationships with, farmers around the country. It's a lot easier to make a deal with one of the big, massive food producers and buy your pork from them than to buy from a whole bunch of farmers around the country. And so that is a big moat for Chipotle, very difficult to replicate.
Yet Jeremy is shorting Chipotle, betting against a billionaire. The restaurant industry is one of the most romanticized and ruthless markets. Few industries have suffered as much as restaurants in the past years. The failure rates and thin margins that restaurants endure are infamous, not to mention the competition. There's French, bistro, Italian, Mexican, Chinese, American, Japanese, and so on. But you might say, what about steakhouses like Texas Roadhouse? In America, the steakhouse is as much as a cultural rite of passage as it is a fine dining establishment. When people go to a steakhouse, it's for the experience as much as the food. They dress up, they expect quality service for their money, and the meal serves as a platform for business or celebration. In the eyes of millennials and Gen Z who don't own their own house, struggling to pay for their groceries, fine dining seems like an occasional thing as a treat or a celebration.
What is he doing?
A special occasion.
The economic outlook remains uncertain, and monetary policy plays a big role in shaping this outlook for investors. We have no idea when the Federal Reserve will cut the rates, or even if they will. Given how stubborn inflation has been, certain stocks have been unduly impacted by previous rate hikes, and others are surging ahead of anticipated cuts. But if the Fed doesn't do what is expected, some stock could be in for a rude awakening. That is where buying Fed-proof stocks may make sense. These are the sorts of defensive companies I think investors should be focused on right now. Famous companies with a big moat like McDonald's, KFC, Starbucks, and Burger King. So you might ask, why not invest into McDonald's stock or Yum Brands or Starbucks stock? Well, they are bigger. That doesn't mean they are better. McDonald's stock has so much debt, $53 billion, and they have negative shareholders' equity or negative book value, which means if the business can't pay its debt one day, when the interest rate is high enough, there is nothing left for shareholders, no meat on the bone. I like to check a ratio, debt to equity ratio. Most restaurants have high debt, but some like Starbucks have a negative ratio because they have a negative book value. QSR has a positive book value. We actually have positive shareholders' equity like most other great businesses like Coca-Cola. Restaurant Brands International is my only pick for investors seeking truly defensive exposure to the consumer discretionary sector. The U.S.-Canada-based company provides investors with exposure to 4 key banners I think are world-class. Those include Tim Hortons, Burger King, Popeyes Louisiana Kitchen, and Firehouse Subs. Accordingly, the company's cash flow profile is diversified and has remained strong, allowing for a consistent dividend yield around 3% in recent years. Notably, the company has also put forward ambitious growth plans, hoping to grow to more than 40,000 restaurants in the coming years, with $60 billion in cash revenue. If that takes place, the company's current valuation will certainly seem attractive. Folks need to eat, and in any economic climate, that will remain true. However, if the economy declines, as many expect, the trade-down effect could actually bolster this company's position in the market. It's my view that QSR stock is the way to take a defensive stance on consumer spending, and it remains my only restaurant pick in the market right now for this reason. Out of all of the experience with Tim Hortons, I've seen the growth of the company. I've seen how amazing the company is. They had sandwiches with a pickle, carrot, and celery on the side. They had glass bottled juices, and they had fruit punch and a whole bunch of other different things, and it was all glass bottled. They had homemade pie and cakes. They had chocolate eclairs that I loved. They had Nanaimo bars and brownies. Then they went to muffins and donuts, bagels, soups and sandwiches, chilies and bread bowls, and chicken stew and bread bowls. Chicken stew was my favorite. It was so delish. As an investor, do I agree that Tim Hortons is a good company to invest in? I would say yes. Yes, it is. It's way better than Starbucks, and it's actually attracting those people. In these inflationary times, it's attracting those people that can't afford Starbucks. So they will actually leave Starbucks because it's too expensive for the $7 coffee, and then they will go to Tim Hortons and bring that $7 into Tim Hortons. So this is the thing when your product is actually amazing and it's not breaking the bank for so many people, students, families with children, people like that are hardworking class, right, that have a retail type job. They're not going to want to spend half of their paycheck just for lunch. So this is the thing where these companies that are at a modern price target, they are getting all of those extra customers from those other rich businesses. So this is the one thing that I look for, and that is one of the competitive advantage I think that they have, that a price target on the menu is not that big. So they're going to like snag all those Starbucks customers and all of those other restaurant customers that the prices are just going too high. So Restaurant Brands International stock is a blue chip that income investors may wish to consider nibbling on the dip. QSR stock is now down around 12% from its high. With a gross margin of 58%, profit margin of 16%, and plenty of global expansion opportunities to seize, I'd not sleep on the name as it skids lower. Why did I buy this stock? It's a $22 billion growing business. Woohoo!
Have any of you ever eaten at Burger King?
Yes. Why?
Well, I was just driven past one. And while I know their market cap is $7 billion plus, I realize I am unfamiliar with their offerings. And their selection consists solely of these burgers, of which they are presumably king.
They have other things? Chicken, fish. I'm sorry, what are we doing here?
Here's what we will do. Monica, have one of the assistants go to the nearest Burger King location and purchase one of everything. This is which one?
The BK double stacker.
Fascinating.
Peter, I know that you are incredibly busy with this.
Cicadas. Happy?
See? I told you he was taking care of it.
And now, would anyone like some BK? Evan was kind enough to go out and get breakfast. It's just sitting here.
Actually, I'd love some. Thank you so much.
Restaurant Brands continue to impress investors with solid comps growth. The company intends to focus on improving the quality of its offerings and expand into high-growth food and beverage categories to drive growth. Increased focus on digitization efforts bodes well. During fourth quarter 2023, digital sales increased over 40% year over year, courtesy of strong contributions from kiosks and delivery. The company showcased strong digitalization efforts and continued to drive growth for its Tim Hortons brand with 5 million average monthly users and consistent digital sales mix of approximately 30% in the quarter. QSR sees immense potential to expand its brands globally by strengthening its presence in existing markets and venturing into new ones. In 2023, expansion efforts extended to more than 75 markets beyond the United States and Canada. Together, the brands contributed over 45% of net restaurant growth in 2023, a considerable rise from the 10% reported in 2019. Primary drivers of net restaurant growth in 2023 included Burger King in China and India, as well as in France and Spain. The company is optimistic about growth prospects and is committed to expanding its restaurant base towards its long-term goal of 40,000 locations. Finally, we have an M&A opportunity when a big company buys a small company. The big company shares price will be discounted. Burger King's parent company has signed a U.S. $1 billion deal to buy the brand's largest U.S. franchisee. Carroll's Restaurant Group, which is 1,022 Burger King restaurants in 23 states, as well as 60 Popeyes Louisiana Kitchen restaurants in 6 states. Under the deal, QSR will pay U.S. $9.55 per share in cash to acquire all of Carroll's issued and outstanding shares, which lift Carroll's TAST stock up by 12%. The plan emerged after Burger King made a $400 million investment in 2022 in remodels and improving operations by enhancing marketing and brands technology. QSR said it expects the transaction to be complete in the second quarter of 2024. I expect a discount in share price the day when the deal closes. I hope you all enjoyed my video. Let me know what you think in the comment section below about this video. I would love to hear your thoughts. And have an amazing day. Bye.